we'll just go ahead and dive in. I try to keep these an hour or less, and I know your time is valuable. So let's just dive in. Grower's Guide to Cannabis and Hemp CBD Accounting and Tax. We'll go through lots of stuff. What seed to sale is. I know that confuses people. Why cannabis companies are prime targets for audit and how we can help them prepare for that. We'll look at 280 and 47111 and why it's super important we're doing correct gap level cost accounting, court cases, entity structures, governance controls, and how to find your first client. So we'll just dive in. I teach around the US. I'm going to be speaking several times at AICPA Cannabis Conference in Denver, August 8th to 10th, I believe, 3 days. If you're there, love to meet you as well, and speak around the US at cannabis events as well. I was in Chicago, going to be there again in September, and then we're going to be in New Jersey in November and maybe MJ BizCon as well. The IRS, so this is kind of the continuing theme. It's been going on for about 2 years now. Really, we'll look at the TIGTA report. The IRS is adding more resources, and really since the new administration, they're very much targeting marijuana businesses, and whether you're looking at the federal US government or our states or counties or cities, they all need dollars. And more often than not, if probably, very, very high percent chance, if any of those authorities go to audit a cannabis company, they're going to find dollars owed to them. So it makes perfect sense that they would, our government's broke and needs money. So it makes sense that they're going to come after this industry. That is the next slide showing, this is forecast to be 177 billion market by 2030. These numbers are all over the place, but it really doesn't matter. I mean, the more important numbers to me are the industry is growing globally and nationally at a very, very rapid pace, regardless of who's president, regardless of red states, regardless of green or blue states. It's growing everywhere. It's growing at the federal level. It's growing at the state level. It's growing at the city level, county level, and it doesn't go backwards anywhere. And so we'll see. We've got more initiatives on state ballots in November. We're very close to federal legalization. We've also you've seen hemp and CBD legalized over, a couple of years ago. So the movement's moving rapidly forward. It makes total sense because first off, in just America, 7 out of 10 Americans want medical cannabis for good reason. It's real medicine. It's, it's been anecdotal medicine for centuries, and definitely the last 50, 60 years, but the science has caught up in the last 10 years, and the science is growing rapidly. The big pharma's here. Pfizer did a $6 billion acquisition. Hospitals, universities, our federal government, other governments are studying the myriad of medical uses for all these chemicals, THC, CBD, CBN, elsewhere. So industry is growing rapidly. This report 2 years ago from TIGTA about, again, more tax compliance efforts, more guidance. They did a survey of a whole lot of returns on the West Coast, and I think 8 out of 10 of them were wrong. And guess what? Most of them were wrong underpaying tax. And so we find via our Dope CFO program and all the hundreds of Dope CFOs around the US, it's very, very, very rare that you would go find any client that has anywhere near close to correct accounting. And if you don't have correct accounting, I can guarantee you your tax return's wrong. Seed to sale is basically what states came up with, because as a state legalized, what they really want to do is, like Oregon, for example, they want to eliminate the illegal markets that have been thriving here for decades and convert those people and make it easy for those people and new companies to join the legal markets. So what they want to do is be able to track through the many verticals of the industry. So whether you have a farm and you grow pot and then you send it off to the processing plant where they turn it into oil, and then the oil sends it off to the product manufacturer where they make tinctures and beverages, et cetera. And then they send it to the distributor, and then they send it to the dispensary, and then they send it to the delivery company, and it finally gets to the consumer. The state wants to track that seed to sale, and really, first and foremost, they're tracking things that are not dollars accounting. They're tracking grams and pounds and seeds and plants. First, the seed goes in the ground and the plant. And so they really want to track that as it goes through the system. Now that said, the tracking software every state uses, Metric, MJ Freeway, or BioTrack, in my opinion, all three are pretty poor software. And so we have to do lots of work to make sure our clients are actually in compliance and the numbers are actually accurate. It's very important. We talked about the sub niches, and where this webinar is mostly focused on cultivation. But first and foremost, like in Oregon, if you are required to update your seed to sale system daily, and more often than not at the farm, you have tons of people that may have their hands on the software to update. They're counting plants, and they may not be accountants. And so we find lots of data entry errors. It's not surprising. But if they find out your input is wrong, or you're not doing it, or you're not doing it correctly, they can revoke your license. And when a typical farm, investors may have poured 5, 10 more millions of dollars into that farm, you don't want to lose your license. That would be money down the drain. And then even if we don't lose our license, we want to make sure we're doing the great accounting so that we can minimize taxes as well. Many challenges in this industry, but whenever you find challenge, you find opportunity. There's many vendors that won't service the cannabis. Think some accounting systems, POS, like there is no QuickBooks POS system like for every other industry. Merchant services, payroll, banking, we find issues everywhere. The software is often new and not super great. We talked about the seed to sale tracking software is very difficult and not great either, often buggy. Cleanup is definitely pretty much a given in this industry. Lots of reporting requirements. We've also got lots of compliance issues with even FDA, USDA, OSHA, et cetera, specifically for hemp and CBD. We're going to find multi-entity structures almost everywhere at every mom and pop client. We may have standalone financials, consolidations, and also combinations, combined financials. So lots of complexity for us as well. So let's jump in and look at the tax codes. 280E is the main one affecting the industry. So this did apply to cannabis, hemp, and CBD. Now hemp and CBD is off of this, but still very complex, and I'll tell you why in a minute. But this applies to cannabis for certain, and any other Schedule I drugs, no deductions or credit are allowed. Period. That's those first 5 words. Very important. No deductions, no credits. It doesn't say, oh, except for the R&D credit or whatever credit you love. It says no credits. If you're trade or business, it doesn't say your multi-entity structure or your LLC or your C Corp or your partnership. It says your trade or business. They made that very broad for very many good reasons. So you may have 100 legal entities, or you may have one, and they may still look at you as one entity, or you may have no entity. And I tell this, I said, imagine, your teenager, 16 or whatever, selling pot to kids at school. That's still trade or business, still required to file a tax return. Doesn't matter if he has no entities. Doesn't matter. This is broad to be a catch-all to catch everybody, that basically, if you're selling pot, you're required to file a tax return. And oh, by the way, you get no deductions or credit. Pretty simple. Obviously, a 8-year-old could fill out one of these tax returns because there's no deductions or credits. Just plug in your revenue and pay your tax. Luckily, it's a little more complex than that for growers, and we'll talk about that in a minute. On a side note, we get this question a lot around 280E, what's the best entity structure? The correct answer is almost always in this industry for many questions is it depends. And so make sure you know what the ownership structure, almost guaranteed you've got investors and lenders. So you got to know who all the stakeholders are, what their risk profile is. If you've got investor A, a billionaire, investor B, a 25-year-old kid, they've got different investor profiles, different thoughts about asset protection. A 25-year-old kid with no assets doesn't care about asset protection. The old song, when you got nothing to lose. We'll find that all the time here, a young kid running the farm and a big rich investor. And so that means we got to look at this from many different ways. We want to know what kind of capital is being raised, how it's structured, what the different goals of each investor, can they fund tax bills, even if there's no cash within the business to distribute for those taxes. And that can be very common in an LLC structure. In LLCs, you can have minority interest owners. if they don't have a mandatory clause in the operating agreement around mandatory tax distributions, this can really backfire. We've seen that happen many times. And also look at current rates, expected future rates, and different entity capital or tax rates. So there's a lot to think about when we're looking at entities. There are often reasons to add another entity like a real estate company as well. We want to make sure we have attorneys involved, and especially good cannabis attorneys that are good at corporate and tax. There's many attorneys out there pitching strategies that simply don't work for tax strategy, and people are paying attorneys lots of money. So be careful on that as well. Okay, let's look at 471. And that's the rule for inventory. That's kind of the good news for growers. If you, again, remember no deductions or credits, but that said, if you are a grower, inventory is not a deduction or credit, or really anyone, dispensary, manufacturer, inventory is a return of capital. And so we're allowed, any drug dealer, even if you sell heroin, you're allowed to book up inventory. And when that inventory is sold, you can credit inventory and debit cost of goods sold. That lowers your taxable income and that lowers your tax bill. And so obviously the more dollars you get in inventory, the better for the farmer, because that will eventually lower taxable income. Now I have people asking all the time, does 471.11, can I put heat and air into cost of goods sold? And we have to remind people over and over and over, you don't ever put anything in cost of goods sold. You put things into inventory. That's 471. You don't get any cost of goods sold until inventory is sold. And that's a simple entry because you've already got it in inventory, and then you'll hit cost of goods sold after that. So be careful about, I've seen many accountants and bookkeepers out there just plugging things to cost of goods sold. You don't want to do that. 471.3, we're not going to talk about for retailers. They get it much worse than growers. But for growers, processors, manufacturers of not just edibles, but other products, beverages, lotions, whatever, 471.11 applies. We got to put many more costs into inventory. It's very complex. You need to do cost accounting, and you need to do it in accordance with GAAP. But what are those costs? And we'll look at it in more detail, but all direct costs, direct material and direct labor, all of those, plus we have to look at 3 categories of indirect costs. Category 1, things we have to include. Category 2, things we never include. And category 3, which is where dope CFO VIBs save their clients a lot of money, is costs that can be added to inventory if we're doing it recurring. That means not just at year end, month in or month out or quarterly, and it's in accordance with GAAP. Almost nobody's doing that. So I tell them they're missing out on category 3, and they're either overpaying tax or they're doing their tax return wrong. And both of those are bad answers to the farmer. So direct costs and direct materials, I'm not going to look at because those are easy. If it's soil or direct labor, that goes right in inventory, all of it. Where it gets complicated is indirect costs. So let's look at category 1. So in general, indirect means all those costs which are incident to and necessary for production. And so oftentimes people are saying, well, what about this one? What about that one? Well, read this definition. And is it incident to and necessary? If that's the answer, then yeah, it probably is an inventory cost. And then you can try to further look, well, where would that, and Lauren, you're right. Be concerned. Yeah. Virginia. Yeah. Good try. You can try that. And that's what, many of our Dope CFO VIB competitors are doing. Bad idea though. You should be doing this in your recurring financials. So anyway, but again, everyone gets to do what they want. So I agree with Lauren. I would do it monthly, not to mention that's going to add a ton more value to the client anyway, which is what we do. So 471, let's look at category 1. There's a whole long laundry list of things here that are very big costs. We want to make sure we don't miss anything. Repairs. Look at maintenance. There's a whole crap load of stuff that could fall into maintenance. Utilities are huge. Rent, indirect labor, indirect materials and supplies. Again, that's pretty broad. When I was down on the farm, we were spending an absolute fortune at Home Depot and Lowe's every single day. They were, the guys, they had their own credit cards, and we're going over there, and a lot of that stuff is indirect materials and supplies, tools and equipment, and other costs. So there's a lot we can get in right there. Category 2, do not put these things in inventory. Marketing, advertising, selling, distribution, those kinds of things, percentage depletion, G&A, all those kinds of things that most of us wouldn't put in inventory anyway. So just go ahead and don't do that. Well, I've seen many returns where people put everything in inventory and cost of goods sold. That is a bad idea. Indirect cost, this is the category 3. And here I like to highlight, because people say, well, why does it got to be GAAP? Because it says right there in the tax code. This is a quote out of the tax code. And again, but only if that treatment is not inconsistent with GAAP. So for inventory, at least, we got to make sure we're doing good GAAP level cost accounting. And oh, by the way, what are these costs that are in category 3 that I can put in inventory and make my farmer very happy with me, because I'm lowering the tax he has to pay the government? They're pretty big ones: taxes, depreciation, employee benefits, costs attributable to strikes. That may not be so big, but rework, labor, scrap, and spoilage might be. Also, officer salaries, factory admin, insurance costs. I don't know, it looks to me like you get a lot more cost in inventory. And so that's what I would be considering. And I'm seeing, there's a couple of people here in the program. So glad to have you back. You'll see. So we're going to go into the tools and processes. Everyone in the Dope CFO VIP program has all of these things already, and many more. But we're going to look at what you need. You need a lot of things. And I found this out, quickly. I didn't really think through the whole industry when I accidentally found myself out there at the farm, but I real quickly started like, oh, I need a chart of accounts. I can't find a good one in QuickBooks or whatever. And I need a better chart of accounts. And then I need a PBC list. I need a controls document. And it started going one after the other to where we are today. I think we have 100 Workpapers in our program that are used for cannabis accounting. Fixed versus variable cost. So again, our trial balance, we got to look at each one of them and see, is it fixed? Is it variable? What's a reasonable way to allocate? We can't just blanketly allocate all of them the same way. So when we look at rent, we might say, well, we got a building, an indoor grow, and the indoor grow takes up 80% of the building. So we're going to allocate 80% of rent. That might be perfectly reasonable. But then the IRS comes in and says, wait a minute, what about all these rows between your plants? And then we can maybe get into an argument, well, we need those rows to water the plants. They're necessary and incident to. And so as long as if you actually go down the trial balance and come up with a reasonable method for each cost, you're going to be a lot better off than what most are doing, which is doing no allocations at all. And again, what does it cost to grow a pound of weed? I love to ask this question to farmers and CEOs of the farms. They'll tell me all kinds of things. I've gotten so many different answers to this question. And if they ever say, it cost me $823 a pound, I'm like, great, you're doing cost accounting. How are you doing cost accounting? Because if they don't have a Dope CFO VIP and I'm talking to them and I know there aren't tools in the industry, usually they're not. They're just kind of eyeballing it and coming up with their best guess. And they've maybe done some kind of Excel calculation at best, which isn't cost accounting. And so I tell them to know the answer to that, which is a very important answer to know, regardless of tax. If you don't know how much it costs to grow a pound of your weed, you're not going to be able to run your business very well. And so we need to know all these different common costs that need to be allocated into that inventory, and many more. I mean, on a typical trial balance, there may be 40 or 50 costs that we're going to partially allocate into inventory. Now, when you look at something like, say, utilities, and you allocate it, again, it's a complex process. We need to come up with equivalent units. We need to know yields and strains. We need to know percent complete. And then we're going to be doing an allocation into several places. So like if it's the heat or the air conditioning bill, we may put part of it into WIP, part of it into finished goods, part of it into cost of goods sold, and part of it stays in utilities. We use a flower calendar that can estimate yields by strain and by, even every single plant if we want that detail. We'll look at the percent complete. This is just a snippet. We need to know each client's grow cycle from start to finish. And we color code those different phases. There may be 8 or 9 phases based on all those different stages from, planting or veg, grow, harvest, what else? Dry, cure, trim, off to the lab. Thinking of all those stages, we need to know every client cycle is different. We have to know that cycle so we can estimate percent complete for every single plant. If you planted the gorilla cookies yesterday, they're on day 1 out of, say, day 150 days, and maybe you have another plant that's on day 149. Those plants are going to get allocated differently. We're going to need lots and lots of work papers and tools to actually not pull our hair out if we're doing this correctly. We start with onboarding, many tools in onboarding. We want to set up internal controls, accounting policies, procedures, corporate governance, super important. Getting a great PBC list. We use a perpetual data room to set them up so they're always ready for audits anytime. And not just audits, their stuff is ready and audit proof so they can have access to capital or M&A or exits or lenders or whatever they need. Also, cleanup systems, close checklist tools. We have lots and lots of cost accounting tools, starting with operational data templates, how we collect data out on the farm or the manufacturing plant. And sometimes you're going to have vertically integrated. You're going to have many of these cycles at one place. And so we have more issues about intercompany accounts, transfer pricing, all that kind of stuff. You've got finished goods, flour over here at the farm, but that becomes raw material at the processor. So lots of confusing things to think about. Month-end tie-out systems, we call this our permanent audit trail. We like to build that for every client every month. Financial report templates. Cash forecasting tools, we need to be able to help them predict their cash flows, because whether you're a farm, manufacturer, dispensary, they're eating up lots and lots of cash on everything from rent, labor, hopefully accountants, attorneys, whatever. They're spending money left and right. We've got to help them manage that as well. Startup tools, other what I call value add docs, startup tools could be pitch decks, financial models, cap tables, even investor introductions. Lots and lots of tools for them as well. So many tools to get going on that side. Onboarding, again, we talked about that, but looking a little bit deeper. So right off the bat with your engagement letter, again, that's a legal document. So I make sure every state is different. So for my state, I made sure my attorneys reviewed that and has the appropriate cannabis language in there as well, since this is still federally illegal. Like to make sure that's tailored to that as well. We have a way we like to make offer. This isn't really a pricing webinar, but we have a way that we do pricing and offer. PBC list. This is absolutely crucial, getting what you need from the client. I let them know, and this again ties into charging a high price and charging it up front and letting them know, hey, the clock is ticking, and if you're not getting me what I need, you're just throwing money down the drain. Most farmers do not want to throw money down the drain. I find the higher the fee I have, the better cleanup goes. And if you want to have cleanup be a nightmare, go out and charge a farm $1,000 a month or $2,000 a month. Guess what? You'll never get anything you need, because they do not value accounting and tax. Perpetual data room will set up and organize their stuff on their cloud, not ours. So they're ready and they can use their data that actually adds value to them. The big firms still don't get this. So I guess I'm the genius in the room that figured it out. And yeah, it's a big headache to send stuff to people via secure servers. And, I deal with national firms all the time. And every time they email me, I have to log into a secure server to read an email that often is a junk email. It's a nightmare. Also putting in our controls and corporate governance as well. Permanent audit trail. We've got to do this for our clients. I call rock solid accounting is the foundation of everything else owners want, like more cash, correctly done tax, peace of mind, great reporting, those kind of things. It all starts with audit ready books. Again, even outside the cannabis industry, you look at these rapidly growing companies in the $1 to $10 million range. They're not quite big enough. They haven't maybe gone to the full-time, high paid CFOs and audit and, national accounting firms. Usually the books are a wreck. They're nowhere near audit ready. So we can add a ton of value by getting them audit ready. We do tick marks and tie outs. We spend the extra effort to find and fix errors, document all of our journal entries every month. So no one's digging around like, I found 4 journal entries in QuickBooks. I have no idea what they're related to. Why don't we go ahead and document those and build that out in our permanent audit trail every month? It's going to go backwards and forwards. So I can drop over dead and my client is still fine if the auditor shows up, because the auditor will be able to follow the audit trail backwards and forwards from either end, from the reporting end or from the source document end as well. This is just a snippet, a typical month-end file. We'll have about 30 tabs in an Excel file with lots and lots of tie-outs, again, backwards and forwards. And this is very useful and very value-added to clients. Inventory, the first thing right here, before you start your month-end, again, some of this stuff is complex and some of this stuff is super simple. So I tell everyone in my program, first off, you got a good client, be responsive. That takes, you could have an 8th grade education, but you could be responsive, super responsive to your client. Guess what? None of the big firms are responsive or even close to it. So that's very low hanging fruit to make your client happy. So that's one simple thing. Another simple thing, counting. Everyone can count. Get the inventory, the plants, the finished goods counted and weighed every month out on the farm. I'm not talking about dispensaries, so let's just talk farm. Also, usually a lot of cash floating around. They usually have a safe. Make sure we're getting that counted probably weekly, and make sure the people doing the counts are getting the counts directly to you, that they're not going through anyone who's doing accounting or any access to the books. We want to do those separately. Then we're going to tie out those counts to whatever software, seed to sale, accounting system. Make sure we actually have agreement. We make sure their seed to sale system is correctly up to date. It's super important. We've seen people get really dinged by the IRS when they're like, oh, you didn't even count inventory? Oh, you're gonna, we're like, look at the Alterman case. I think they got lots of fines already, but then they tacked on another 70 grand for sloppy accounting. So I would be just appalled if my client got a 70 grand fee because of bad accounting. I'd be like, oh man, I'm gonna have to give you that money back. That's not good. Then we also want to have great reporting as well. That's not just, again, I found many clients that simply have counting, no month-end process at all, do a bank rec, that is the month-end process, and print a really ugly looking balance sheet and P&L, and that's their reporting. We can do a lot better than that. Someone posted in Q&A, but I hate to tell you, I can't see Q&A, but if you put that in chat, I'll be able to see it. Investors are now aware. So we're in, again, about year 10 from when Colorado legalized, and this movement swept the nation. It was really, really, really bad the first few years. It's getting a little bit better. The counting's still pretty bad, but at least the investors are catching up to the idea that they're not just going to hand out money to any old company that has no controls, no governance, no qualified accountant on their side that actually has knowledge and tools and community. So they're getting it. I see this even in our group after people join our program. When I talk about this endlessly, complex entity structure with no purpose, that does not work. 280E, all you have to do is read 280E, and then you can read Harborside if you want to go deeper, but you really don't need to go deeper. 280E applies to a trade or business, so they don't care if you have 50 entities. So the way I like to tell people is you could have 50 legal entities and the IRS could come in and say, I don't care, you have one cannabis business. And so all 50 of those entities, 280E applies. Conversely, you could have one entity, an LLC, and you actually could have 2 businesses. You could have a legitimate cannabis business in that LLC, and you could have a legitimate, say, clothing company in that LLC. You could track it as a separate division and say it was a successful clothing company doing a couple million in sales and it was profitable. That's totally legit. And guess what? You didn't need to set up 3 entities to beat 280E. You just actually did it correctly. Also, just not putting everything in to cost of goods sold, just because you think that will lower tax. Small and unprofitable cannabis divisions don't work. People tried this over and over, like, okay, let's sell 100 grand of t-shirts and let's allocate $1 million of costs. And let's have a $900,000 loss in our t-shirt division. Again, that doesn't work. So if it doesn't pass the smell test, always start there. Does this sound legit? Like, what about, oh, my dispensary's giving away pot. I mean, basically they sell whatever rolling papers for, they sell a thing of rolling papers for $100 and then they throw in a free gram of pot or whatever it is. Does that pass the smell test? No. So anything that doesn't pass the smell test, that's your indication that it's not going to survive when the IRS comes out. They're not idiots. They know what's going on. So we tell people, let's do 280 correctly. We can provide a lot of tax relief if we do 471 correctly. You go out and focus on what you do best: growing pot, building your brand and market share, growth, vertical integration. Valuations will often be based on those things anyway, just like we've even seen in the high-tech industry for decades now. And so go focus on those things and you can still hit a home run.